Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and right now I'm going to be talking about the stock indices and basically talk about the most major moves in the stock market. I haven't been able to get the Jim Cramer sounds yet. I will get them pretty soon, but as the moment, I'm just going to go ahead and talk about stocks on my iPad until I get the full resources that I want. Which is to replace my laptop and then get the sounds going. So until then, you're just going to see me talking and using this device while I'm talking. So without further delay, let's go ahead and talk about what's been going on lately. So the stock indices have been heading higher. The stock market initially fell and then it went up again. So a lot of people were saying, well, why isn't there this massive positive reaction after quantitative easing has come out? And the thing is that it takes time. Very simple. It just takes time, and it takes time for market participants to price in the changes and to basically anticipate further improvements in valuation. Now, as far as I'm concerned, we live on a planet called reality, and in the world of reality, markets don't just readjust themselves immediately. That doesn't work. It doesn't work that way. So what happens is that again, markets do tend to, just meander a little bit, and then they start to move up a little bit, and they go up and up, and then all of a sudden, people start to realize that the trend is starting to form. Right now, we're in those moments. So let me go ahead and talk about what's been playing out. First of all, as you guys can see, the 20-day moving average, the Dow Jones has hit the 20-day moving average. And then after hitting the 20-day moving average, it has headed even higher and is starting to bounce off the 20-day moving average. Now, the economic data has been extremely good. Like, I'm talking about not like super phenomenal, like, oh my god, good. But what I'm trying to talk about is that 7% unemployment, not 7.0% unemployment, but 7.8% unemployment. So we're back in the 7% range now. We're getting closer to that 5% statistical. The point where the unemployment rate should be at is around 5 to 4%, and we're only 2% away from it. So we're 200 basis points away, but we basically had a 400 basis point to 500 basis point improvement over the past couple months. So that is very positive. That's giving the markets a nice little jolt, because now we're starting to say, hey, maybe the economic data isn't that bad. That maybe the stock market might head even higher, and that with the quantitative easing included, perhaps this stock market might have even more room to go even higher. So that's what's giving me an optimistic outlook on stocks in general. I think that the stock indices have a reasonable chance of actually hitting, Dow Jones hitting 14,000 by the end of the year. Can you believe it? Dow 14,000? Yes, Dow 14,000 is within reach. I think it's more than just possible. I think it's a reality that we should actually consider. Now, let's go ahead and talk about the S&P 500. S&P 500. It is breaking out of a pennant formation. It's currently at around 14,693. All right. Now, going forward, I think by December we're going to be looking closer. So by December, we should be somewhere up around here, at least. So Dow 14,000, somewhere around there would be a reasonable bet to make. Now, the reason why I'm saying, maybe 1,500, 1,484 is because again, good economic data, we got monetary easing coming into play, and finally, we're getting towards Christmas. And Christmas is a season where retailers do very well, and it's also a cyclical period where bulls like to pile in and do some sector rotation and buy into the more volatile stocks. So everyone's going to get a lift. All the boats are going to be floated higher. But what I really want to look forward to is retail, because unemployment rates dropping will make the retail sector do very well, but it's also going to make the banking stocks do a lot better as mortgages become much more appealing. As more people get hired, more people will borrow money, more people will be able to borrow money, more lending will occur. So we're going to look at financials, and we're going to look at retailers going forward, and they're the ones that are going to benefit a lot from this good economic data, the unemployment rate improving. So that's my outlook. I anticipate the Dow Jones to be hitting 14,000 by the end of the year, and I also anticipate the Standard & Poor 500 to at least reach 1,500 in the foreseeable future, maybe 4 to 5 months down the road as well. So that's my outlook. Hope it helps. And if you guys like what you see, go ahead and subscribe to my YouTube channel. And do remember, though, that I do have a website called www.fitrade.com. So go ahead and look into that as well. So see you guys later. And I hope you guys have a great day. Hopefully I have a great day too. So see ya.